Hey everybody, Brent the Broker here. Today we're going to be talking about higher interest rates and how you as a buyer can combat them. Before we jump into the topic, subscribe to the channel, throw bells on for notification, drop us a comment if we're being helpful. We appreciate your support. And stick around to the end of the video for our pro tip of the day. So let's talk about rising interest rates. It's the talk of the town, right? Interest rates started the year at 3 1/8, and they're roughly in the ballpark of about 6, and some case maybe high 5s, low 6s, but around 6%. I know that is a huge jump in a very short period of time, and when you couple it with the increase in values we've seen the last couple of years, it can be hard for people to find a deal where they can afford the monthly payment. People can be spooked about what this means for the marketplace, and the affordability challenge for buyers can be very real, and I totally understand that. But there are ways we can combat it. One way that you can get ahead of these high interest rates is with something called the rate buy down, where you can pay money to buy the interest rate down. In some cases, considering that there's less competition out there, you may be able to get a seller to participate where they give you a credit to bring the interest rate down so that the price you're paying for the house is actually something that you can afford on a monthly basis. A rate buy down is one option. Another option that you have is different loan products. An adjustable rate mortgage typically comes at lower interest rates than a 30-year fix, and that's because the bank has less risk because you're churning out of the mortgage in either 5, 7, or 10 years. Now, you're probably asking me, Brent, why would I want to be on an adjustable rate mortgage? My housing payment is going to balloon. Isn't that what caused the last crash, these adjustable rates and these exotic mortgages? Those questions are legitimate. Now, an adjustable rate mortgage isn't going to be for everybody. If you know that you're going to be in this home for 10, 15, 20 years, being in a 5-year adjustable rate mortgage, meaning it's fixed for the first 5 years and then adjust, in intervals thereafter, wouldn't make much sense. But just to be clear, the adjustable rate mortgage, it doesn't typically adjust every day. You do have a fixed period of time, whether the first 5 years, 7 years, or 10 years are fixed. So if you are like many of our military members here in San Diego and your orders are going to be up and you're never coming back to San Diego after your 5 or 6 years here are done, it might make sense to do a 7-year adjustable rate mortgage or a 7-year ARM. And we're going to throw a graphic up on the screen that shows the difference today in an adjustable rate mortgage versus a fixed and how that can help you bring your interest rate down. So rate buy down, adjustable rate mortgage if it makes sense for you. Another option is, this one isn't for everybody because it actually makes your payment a little bit higher, but a 15-year mortgage. The shorter term you're on, the lower the rate typically is. And a lot of people think if I go from a 30 to a 15 that my payment is going to double because I'm paying it off half the time. That's not the truth. Take a look at this graphic here and look at the principal and interest between a 15-year and a 30-year, and you'll see the payment doesn't double, it does go up, and so you'd have to be able to tolerate, the extra payment. But if you're not sensitive to the payment, but you are sensitive to the rate, here's another way that you can get your rate down to something that's more palatable for you. So you have options. There are also ways you can get creative in the way you structure the financing, the way you negotiate with the seller on how you want to do the deal. So the sky is not falling. The market is shifting. A 6% interest rate environment is completely normal. They were telling people after the dot-com bubble in 2001, in 2001, 2002, they were saying, oh, it's a terrible time to buy a house. The market is, the world is ending. Right? That's not the case. The market is shifting, and we have to be cognizant about what that means for each of our unique situations, because every situation is unique. We've described a little bit of that with the adjustable rate mortgages. So there are options that you have to make your monthly payment affordable. And here's what we know, guys. If you rent at $3,500 a month, which is about the average in San Diego for rent, if your rent is $3,500 a month for 5 years, that's $210,000 that you've burned in rent in 5 years. Whereas if you buy a piece of property and hold it for 5 years, the likelihood of you coming out ahead in that 5-year period is a lot higher, and if you hold it for longer, it's even higher. So the pro tip of the day is this, you guys. Interest rate should not be the only thing you're considering when you're considering buying or selling property. I mean, obviously the buy side is more important, but interest rate should not be the only thing you consider. Is it a factor? Absolutely. Is it much higher than it was 6 months ago, and did it go up quickly? Yes, it sure did. And is the market shifting? Yeah, we're seeing different dynamics in today's market than we were 6 months ago, a year ago, etc. But that does not mean that there aren't good deals to be had. There are rates to combat the high interest rate. There's tools and levers that we have at our disposal that can make a deal work for you. If you are considering buying real estate, The interest rate should not be the only thing you consider. It should be one of many factors, including your personal financial situation, your goals, your timing, your family life, because at the end of the day, we all have to consume shelter. So let's try to figure out a way to do it in the way that works best for you. In some cases, that might be renting, but I would say in most cases, long-term, it's not. So let's figure out a deal that works best for you. That's about it for me today. Thanks for watching. Hit the subscribe button, hit the bells for notifications, and we'll see you soon.